Kaspar, we're going to talk about the oil sector. There's a lot to talk about, always when we talk about oil. This week you shared an interesting article from the Financial Times in the Netherlands with us, which triggered us all to say we're going to talk about that today in the Market Reporters. You're going to talk about more as the product oil, about the product oil, and I will highlight a little bit more the companies, the main drivers of this sector.
Yeah, and we decided not to talk about the quarterly figures of Facebook or Google, etc., because there is so many already on the television and the newspaper. So we decided to look at the other motor of the world, oil. Yeah. And an important one, if you like it or not, it's still a really important part of the economy, of the industry of the world. Mm-hmm. And of course, you decide for yourself, I don't want to invest in that sector, in the oil industry, or you do want. We don't have an opinion in it. We are neutral. We are neutral in everything. So that's not, we are neutral in this and we are not neutral in other things. We are neutral in this, but we want to explain more the sector because I think it's an important sector, especially last year, but also nowadays.
Absolutely.
Shall I start with the...
Yes, go ahead.
I think because if you look at the oil price, if you look at the Brent, it's around trading at $85 per barrel. And I think, if you see what's happening on the world
scenario, podium.
There is a lot of things going on. For example, China is opening.
Yes.
And the market expects a lot of oil and demand and gas from China. If you look at last year, 50% of oil, the tankers with gas, LNG, went instead of China to Europe. Good for Europe because we could buy gas again.
Definitely.
But that demand from China will be much bigger. And also, if you look at the sanctions that there are now on Russia, you don't see that yet. I think back in the prices of oil. What are the sanctions? Since 5 December. No raw material, no raw oil are imported by the countries that support the sanctions.
Correct.
From the 5th of February, it's a little bit extended because also like diesel and kerosene is not important anymore. And also the EU, the G7 and Australia, they said, okay, we use like a price level on the Russia oil of $60 per barrel. So again, 85 is the Brent, $60 per barrel. And what does it mean? So they don't buy it, but all the other countries that still buy Russia oil, if they buy it for more than $60 per barrel, they don't support the chain of delivery anymore. Because normally that's supported, the transport is done by countries of the group that has the sanctions. So then they say we don't do it anymore.
You know the importance of US oil on the whole scale? Is how heavy, how important are they?
The Russia oil?
No, the US oil. Because I read this week also that the US oil stock has never been so high. So they have such a huge stock actually.
Yeah. No, that's not that important. If you look at the biggest, it's Saudi Arabia, 12% on the world scale, and number two is Russia with 11%. So the OPEC Plus is still the biggest producer, so the biggest player in the market.
So it's not possible for the US to say, okay, don't worry guys, we'll sort you out. They don't have sufficient for that.
I don't know.
If we would, because they're obviously not going to deliver oil to China.
No.
And I don't know about the deals that they have with Europe. Or that we're going to get gas or petrol.
They have a big stock, so but that's also price pressure. But so a little bit on the market. But if you look at still the Russia oil is trading under the $60. But they are the Russians. They are taking that part of the whole stream into our own hands. So the transport, but they don't have the knowledge as the Western countries, the knowledge and the experience. So there is a really high risk in there. What the market says that if something happens with an oil tanker, the risk is enormously. So that's one risk. What you also see is that they still export to India. India makes diesel out of it and exports it to Europe. So there's also that's why the sanctions don't have that much impact yet on the price. But the countries that have the sanctions are still looking at to do something about those routes.
Exactly.
And the OPEC Plus, they produce 2 million barrels less a day. they don't move
Yeah,
yet.
that will give also pressure.
Yeah, so altogether, until now the winter is not that strong in a lot of parts of the world. So, but there is a lot of, I think, if you look at the oil price, it's quite stable. But I think it can be a silence
Before the storm.
for the storm.
Yeah, definitely. Well, the good thing is that for the oil companies, with the prices last year, they made a lot of money. We saw Royal Dutch Shell, or Shell, is it still Royal Dutch? I'm not sure.
I think, yeah,
I think it's Shell PLC now.
I think you know why it's called Royal, because the royal family of the Dutch, they use Shell as a company, as a support preferred supplier. But I think how the royals go still to the petrol station of Shell only, maybe.
I think so.
So that's why they still called Royal.
Yeah, but they had really good figures this week. So what I did, I just wanted to give a bit of a highlight from, what sort of oil companies are there. So we got upstream, we got midstream, we got downstream, and we got the integrated companies. If you talk about upstream, well, basically they're pumping it up, right? So they're the companies that taking out of the ground, they make oil out of the product that they get from the ground. The midstream companies, they're transporting it. You could process it, those sort of companies.
And store it.
So you can think about Vopak in the Netherlands, for instance. The downstream companies, they refine it into petrol. So they make something out of it that they can sell at the petrol station or kerosene, etc. And then the integrated companies, they are more like in the backbone of the whole system. The integrated companies, they do a lot more.
They do. For example, midstream and
they do more things.
They have at least two parts out of the three. Yeah.
So if we look at these companies, I highlighted Shell, Exxon, Chevron, Occidental Petroleum because it was the biggest riser in 2022, and BP because it's also a large oil company. What I did is I made a little table, which we will share with you in the screen, and we looked at the price earnings, we looked at the dividends, we looked at the assets on the balance, we looked at the debt, we looked at the debt versus the assets, we looked at the income, we looked at the income versus the debt, we looked at the target price in the market, and then we looked at the dividend date. So let me finish with the last one. If you want to buy an oil company, without hearing what I'm going to tell you now, they're all going to pay out dividends on the 13th, the 14th, the 15th, and the 16th of February. So around Valentine's Day, you can get a nice gift from an oil company because they're going to pay out dividend.
You can use that, yeah.
Yes, for your girlfriend. So, a friend. So if we look at the price earnings, Shell is the winner here. You pay 5.2 times the earnings, which is good. Surprisingly, BP, they had a negative year last year. I'm not sure what it was about, but I think it might still have to do something with the big disaster that happened. They have to pay out something. So that's what I understood. If we look at the second one is Exxon, we look at dividend, all about 3 to 4%, 3.5%. So the biggest dividend payer in this case is BP, where it didn't make any money last year. We look at the assets, if that's important for you, the biggest oil company is Exxon with 386 billion of assets. Second, followed by Shell, 369 billion of assets. Chevron is a little bit smaller, 260 billion. We look at the debt, the most indebted company, but it's also the large one, is in this case Exxon with 44.4%. If you compare the debt towards the assets, which one is then actually doing best? In this case, that is Shell again, so another good point for Shell. And the company with the biggest debt versus the assets is in this case Occidental Petroleum. Looking at income versus debt, the winner here is definitely Chevron. They had 128% of the debt was income. So basically they had 22.6 debt in 2022, but they had an income of 28.9 billion. So they're a good point. Looking at target prices, which stock has, based on what the analysts expect, the biggest potential? In this case, it's also again Shell. It's listed at this moment 26.3% below the current target price. So all in all, I think if we look at these 5 companies on a fundamental basis, in this case, if those values that I've just shared with you are important for you as an investor, then Shell is here the winner. But you can see the figures on your screen, and you can take your own conclusions. But Shell, in this case, lowest price earnings, highest target price expectation, biggest potential to say so, and also debt versus assets look the most healthy.
And there was again a lot of discussion this week about the figures of Shell, but also the other companies, because they said, okay, more than 40 billion of profit in a time that a lot of people don't even have access to energy or pay high prices.
Yeah.
And I really do understand the discussion. On the other hand, Shell paid last year 2.3 billion of extra like tax to support. And the new CEO of Shell, he's also said, yeah, but we provided a lot of electricity, of the basics for electricity. So we help people, so they could put on the light on. I do agree on it. And I think if you look at the discussion, I think, on the other hand, 2 years ago, Shell made a loss of 20 billion.
Correct.
So 40 billion of profit last year. 3 years ago, 20 billion of loss.
Yeah.
So
nobody,
there has to
that was no problem.
then there's the but on the other hand, I do understand the discussion. I think that if you say, okay, to those companies, they have to pay some extra, and I think, but you have to discuss it with all stakeholders. If you decide it, you also have to compensate them in the next years from a tax perspective or something. Yeah. And I think that there is maybe in that area is maybe a solution, because you can't change the rules during the game, so you have to also give them something back. Yeah. And I think there could be a discussion. And if you look at the companies, if you decided, Martin really explained it very well about the different sectors, the subsectors within the oil companies and the companies itself. And I think if you look, because it's a volatile market, it's a risk market, everything with investing is risk, but I think you should take in consideration three things. You have to have a look at the financial position of the company, and then you can do it yourself, you can read the balances, but you can also look at the bonds. So they all give out bonds, and how are they rated by the rating agencies? And that says something, I think. It doesn't say everything, but it says something. So look at the financial position of the companies by looking at the ratings of the rate agencies related to the bonds.
Yes.
The second one, low cost operation. A couple of years ago, the discussion came up from where is the cost price level per company. There are big differences.
Yes.
The market says if you can still make profit with your company when the price per barrel is $40, then you have a strong company. And if you look at the midstream, you talked about midstream, if you have 85% of your midstream revenues coming from long and strong contracts, you have also a low cost operation.
Yes.
And the third part, diversification. 2 points I want to highlight: geographical. So if you have a company is working on the whole globe. And the second part, diversification vertically. So what you said, midstream, downstream. If you have a company that operates in all three, they have much less risk, because they can shift when something is happening in one of the three subsectors.
Definitely.
So I think that we gave you an insight in the oil industry, that there is a lot of going on, and I think we don't see everything yet back in the oil prices.
No.
And also the companies, they are in the news, they perform well, but they're also in the news because maybe they perform too well.
They perform too well, yes.
You explained very well the subsectors. We don't say again you should invest in it. We also say that you don't invest in it. That you decide for yourself. We only want to give you an insight in this industry because it's the motor still of the world.
Exactly, but also, and we're gonna round it off. But it's now the motor of the world. But also, if everything's going to be electrified, it's still going to be the motor of the world, because you need oil to produce all these things.
Yeah,
it's impossible to replace what we need to electrify the world. If you think about driving or anything, the combustion engine, we will still need oil to produce plastic, batteries, everything. So it's not going to disappear within the next 5 years.
You decide for yourself where you invest in. Thank you for watching. Give us your time. See you next time.